ติดทน10 สัปดาห์สีไม่สีการเย่คัลเลอร์เนเชอรัล
คือไม่เฟดออกเลย
สวยมากบอกเลย
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, of the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
The top names at the Fed are on Bloomberg.
I have a baseline case going into September that is 50 basis points. That's where I've been since the last meeting. But I have an open mind about whether 75 is going to be necessary. 50, 75 doesn't just depend on a data point, even an important one like the CPI. I like to say that we're data dependent, we're not data point dependent.
Nobody covers the Fed like Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie here in London. Let's turn our attention now to energy. Natural gas prices have been soaring in European and Asian markets as the worst energy crisis in decades intensifies. We are joined now by Bloomberg's Anna Shuraevskaya, who's been following all of this for us. Anna, what is driving the gas price reaction right now? A headline crossing the terminal just in the last few seconds. France's year-ahead power prices rising more than 8% to a record 850 euros per megawatt hour.
Indeed, European gas and power prices are renewing records almost on a daily basis right now. Europe is in the middle of an energy crunch, particularly driven by lower gas supplies from Russia. Especially next week, the market will be watching a 3-day shutdown of the Nord Stream pipeline. And also, obviously, we have nuclear output reductions in France. So the energy crisis is on the agenda. In gas prices as well, we have LNG prices rising in Asia, which is also driving European pricing high because the two regions have to compete for available cargoes, and Asian buyers are starting to buy the fuel for their winter stockpiling as well. And on top of that, we have the Freeport LNG plant in Texas extending its maintenance into November. That will further squeeze the markets, and we are going to approach a very tight situation as we approach the winter heating season in Europe.
Yeah, we heard from Jason Bloom of Invesco saying that autumn is going to be a rude awakening for oil and food prices, and that really links into what's happening when it comes to fertilizers as well. We know that ammonia, of course, is part of the mix there, and production taking a hit as a result of these high gas prices. What is going on there?
Well, indeed, the chemical production fertilizers is a very energy-intensive industry, and as is in the front line of actually suffering from these very high gas prices. Yara International said today that we'll have to curb its ammonia capacity to just 35% in Europe. And yesterday, we have CF Industries saying we'll have to temporarily halt production of its UK unit. As we see, that's taken a direct hit from very high natural gas prices in Europe. And that's also rolling across other industries as well, especially energy-intensive industries from tin to ammonia to glass and etc.
Yeah, so the fallout continuing. Bloomberg's Anna Sharaevskaya, thank you for the latest on these energy prices and the implications in that example for ammonia. Let's bring back in Aaron Kaptein, Global Head of Economic Research at UBS. Aaron, how are you thinking about the implications then for the broader Eurozone economy and whether or not the industrial base of countries like Germany can actually survive this crisis?
So we're now forecasting a recession. So we have negative growth in the next couple of quarters. It's still mild because at this stage, all we've taken on board is the inflation impact on real disposable income and the uncertainty effect. So we don't have rationing in the forecast yet, which would make the numbers a lot worse. But when you look compositionally across Europe, so where is that concentrated? It's very much in Germany, of course, where the industrial base is. So the weakest numbers we have are in Germany, and it's Germany that's leading those European numbers lower. I think what's interesting is that, you obviously were looking, or you were talking about sort of the wholesale gas prices, and they're through the roof. But there is enormous amounts of government intervention trying to break that link between wholesale and retail. And if you look at Germany, which is where the weakness is concentrated, even in Germany, in October, the gas levy only goes up by a net 20% if you adjust for VAT cuts and everything else. So 1/4 of what's going to happen in the UK, right? So that's interesting.
Yeah.
But what it implies is that it's the firms in the budget that are absorbing the cost of those wholesale prices. So I think they're trying to shield the consumer, which is the bulk of GDP growth. But then you're actually going to take pain, I think, in margins and in the budgets to sort of compensate for that. And so I think that's why we're getting increasingly worried just about an investment pause and what this is going to do to capex.
So on that point, Aaron, given Germany's historical kind of prudence around its debt levels, what capacity do officials in Berlin have in terms of increasing that fiscal support?
Yeah, so they have plenty of capacity. So debt levels are low. They are, I think, talking about a third package. So they've done 2 so far. But at this stage, they've done, I think, a third of what Italy has done year to date. So there's certainly, I think, scope to roll out a lot more in the remainder of the year. Now, we're going to get the budgets or the draft budgets mid-October, and I think those budgets will reveal what's coming. So, I think it is the route of least resistance, and I think the most likely scenario that all these governments, in response to these higher gas prices, will add stimulus. So I think that's unquestionable. The only question is sort of how much.
Is the window closing on further hikes from the ECB, given the deterioration in the economy?
No, because this is not. I mean, there's a slowdown, but it's not deep enough. So, and I think the Schnabel speech from a couple of days ago was very clear on that. So this is, if you're going to have a contraction of, let's say, -0.5% annualized for a couple of quarters, that's just not very disinflationary. And when your starting point is, you're running at close to 9%. And you're probably going to go over 9% in September, and you're worried about de-anchoring inflation expectations, then you basically have to keep going until the recession gets deeper. And so I think we're in this sort of awkward phase where, although growth is going negative, they will just keep going. And so we've got 50 in September, and then another 225s, and then they do another 325s next year. So actually, they'll basically deliver a full cycle unless the growth numbers go significantly more negative.
Okay, so 175, still kind of the best case when it comes to the ECB by the end of this year, given what you've just outlined there.
So so we get to, as a level, we get to 1% on the policy rate by the end of this year, and then 175 by end of next year. But and then whether you end up lower, whether you stop out earlier, is dependent, I think, on now how much additional inflation pressure do we get. So for instance, in Germany, we have a reset potentially of the gas levy every 3 months. We have to see what happens on the gas storage, et cetera, et cetera. So I think there's a lot of moving parts which could change that. But for now, I think they're on track to do 50 at the next meeting and then continue hiking at the subsequent meetings.
Okay, Aaron Kaptein, Global Head of Economic Research at UBS, always excellent on the views across this economy. Thank you for your insights. And coming up, we're going to talk about the outlook, in fact, for Germany's economy in more detail with the Deputy Director of the IFO Centre after that survey came in just slightly above the estimate. Stay with us. This is Bloomberg.
ติดทน10 สัปดาห์สีไม่สีการเย่คัลเลอร์เนเทอรัลคือไม่เฟดออกเลยสวยมากบอกเลย
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one, and through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the US shaped the 20th.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Let's focus in on Germany now. And the IFO Business Confidence Index came in at 88.5 for August. That was ahead of an estimate of 86.8. And earlier this morning, Germany's economy proved at least a little bit more resilient than initially thought by growing in the second quarter, despite, of course, surging inflation and the war in Ukraine. Joining us now for more is Timo Hauser, who is the Deputy Director of the IFO Centre for Macroeconomics. Timo, thank you for joining us. Just give us your assessment then of the survey and what it tells us about the fragility of the German economy at this point, as it struggles, of course, with those record energy prices. The survey coming in slightly better than the estimates, but still showing a weakness in terms of confidence.
Yes, that's right. This is the only good news that I can tell you today. The good news is that it is more or less stagnating our business climate index, and this is in the opposite to what most of the people expected. But as I said, this is the only good news. The bad news is that the low level of the confidence that we saw in July was confirmed, and in July we really had a crash of the IFO Business Climate Index. And so this, of course, has implications for the third quarter. So if you compare business confidence of the third quarter with that of the second quarter, then this is clearly signaling a decline in economic activity of the German economy in the third quarter. So after this more or less stagnation in the second quarter of GDP, we expect GDP to decline by around 0.5% in the third quarter.
Given everything you're seeing, everyone you're speaking to on the ground there in Germany, do you expect that drop in sentiment to continue to get worse in the months ahead? And which sectors of the economy are feeling the most pressure at this point?
Well, the decline in the business confidence is something that we observe over all sectors. On the one hand, of course, the industry is suffering from high energy prices, from slowing world economy, and so here we expect activity to stagnate over the next couple of months. But where the index is declining the most at the moment is in the retail sector. And this is, of course, to do with the high inflation rates that we observe in Germany, which are clearly weighing on the purchasing power of households. So this is also the reason for why I expect GDP to decline in the third quarter because of private consumption being weak. Concerning the further outlook, let's say into the fourth quarter, of course, there's a lot of uncertainty at the moment. On the one hand, the uncertainty about how strong the increase in consumer prices will be. There's a lot of price increases still in the pipeline in energy prices. So far, gas prices have only increased for German households by around 50%. This is a large number, but there's still a lot more to be passed through from energy suppliers to households.
Timo, are you seeing evidence of a pickup, an increase in closures, business closures, bankruptcies?
For the moment, I don't see this. I mean, it is not really a severe recession that we are entering. It's not, I mean, 0.5% of decline in GDP. This is nothing which should, in the end up with a high number of bankruptcies. But still clear, I mean, this is a weakening of the German economy, and depending on what is going on, especially on the energy supply side, I mean, this is the other big thing which is really uncertain. So is there enough energy? Is there enough gas over the winter month? And in case we are entering a rationing system or a rationing situation where some of the manufacturing industries do not get gas anymore, of course the risk that we have insolvencies is of course increasing.
Is there more that the government, that officials in Berlin can do to support industry and business?
Well, the only thing that they can do is of course to increase the supply of gas, and this is what they have done successfully, I would say, over the last couple of months. So, of course, gas imports from Russia were declining significantly, but the imports from other countries like Norway or the Netherlands have increased. So this is one thing that they can do. Of course, we can give incentives to households and also to firms to decrease the demand of energy. I mean, this is what the government is currently doing. They are reducing energy demand of the public sector, but on the other hand, what the government can also do is of course to increase the incomes of those households which are suffering most from the high energy prices by increasing transfers to them.
We're running short of time, but we appreciate your insights on the back of this survey. Thank you. Timo Wollmershauser, Deputy Director of the IFO Centre for Macroeconomics. Plenty more coming up. Stay with us. This is Bloomberg.
ติดทน10 สัปดาห์สีไม่ซื้อการแยกเลอร์ในทรอคือไม่เฟดออกเลยสวยมากบอกเลย
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
How much of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan's society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
What is your base case for Italy in terms of what happens politically and then what the economic fallout is?
Welcome back. Will it be a hole in one? Investor attention turns to Jackson Hole. See what we did there, Wyoming, for clues on the path of Fed policy. Taking out the toolbox, China pledges more support for the economy, supporting global stocks, plus power pinch. Global gas prices jump to near records as France's Macron travels to Algeria to shore up supplies. Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Pressure is growing on the UK government to draw up emergency measures to protect households and businesses from soaring energy costs moving into winter. Household bills have been rising and are set to increase further with tomorrow's announcement by the energy regulator of a new price cap. Let's bring in Bloomberg's Lizzie Burden then here in the London studio. Lizzie, what are you expecting from Ofgem tomorrow?
Well, Ofgem will tell us how much more suppliers can charge customers for their energy bills in the fourth quarter. One estimate based on wholesale gas prices said that the price cap could go up 80% to £3,500, and it's only set to keep on rising next year. And that's why cities forecast 18% plus inflation in Q1 2023. Yeah. You've got an EDF energy boss warning that more than half of households in the UK could be in fuel poverty by January next year. And so this is why it's top of the in tray for the next Prime Minister, whoever that may be, in terms of both how to change the system and in the short term how to help households pay their energy bills. But aside from this, the price cap doesn't even apply to businesses. They don't even have that protection. They're just exposed to the wholesale gas market if they don't have a fixed rate tariff. So you've had industry bosses overnight warning that perfectly viable businesses could collapse unless the government steps in.
I guess the question is to what extent those businesses can cling on until we get that action from the next Prime Minister. Boris Johnson and his team have made it clear they're not going to do anything until the next Prime Minister comes. What do we know about the next Prime Minister, likely Liz Truss, and what the plans are there in terms of addressing this issue?
Well, not much, but there are hints that Liz Truss would do an emergency budget. It might not be called that, but it would be a fiscal package as soon as she arrives in number 10. Rishi Sunak, if he were to win, has said that he would do more targeted handouts for the poorest households, much like he did when he was Chancellor. But there are lots of suggestions going around of things that the next PM could do that frankly were unthinkable until recently. So the former Prime Minister Gordon Brown is talking about nationalising energy suppliers that collapse. The opposition leader Keir Starmer Starmer is talking about freezing energy bills, funding it through a continuation of the windfall tax. It would cost about £29 billion. There are even suggestions of having an OPEC for gas to try and manipulate the markets. It might be easier to get the EU on board than the US with that. And then finally, there's this idea of targeted blackouts to reduce demand. So it feels a lot like the 1970s here.
So some thinking out of the box to kind of address this issue. What do we know then about how the UK compares in terms of response versus other European countries?
Well, if you compare the energy price cap to what France has, it's quite similar for consumers. What's different is that France effectively owns EDF, or at least it has huge influence over its power, its price setting. And so in the UK, the debate is, do you keep up what some would argue is a pretense of a retail market, where people are exposed to prices in the good times and in the bad times potentially the suppliers get bailed out? Or do you go for a more France nationalisation sort of model? But it's not just how people use, how people are charged for energy, it's also how they're using it. So in the UK, we're much more reliant on gas to heat our homes than, say, Germany or the US. And that's despite the increased use of renewables in the UK.
OK, Lizzie Burton, thank you very much indeed, of course, on the challenges, the particular challenges for the UK and how the future Prime Minister, the next whoever it is, future Prime Minister, of course, of the UK, will address that. Just a line crossing the terminus of Redhead, PetroChina, in terms of income, net income for the first half coming in at 82 billion yuan. The context is that's an increase of 55% year on year, of course, linked to those very high energy prices. And talking and continuing with this story, the energy crisis, of course, as that continues to bite in the UK, across the channel in France, President Emmanuel Macron is also looking for relief ahead of a challenging winter. Later today, he's going to arrive in Algeria, the former French colony, and one of the world's largest gas producers. For more on this, let's bring in Bloomberg's Caroline Conat in Paris. Caroline, what are the official reasons and maybe the unofficial reasons behind this trip?
The official reason is to improve the relationship with Algeria. That's been damaged recently by a lot of diplomatic tensions over visas, tensions over Algeria recalling their ambassador in France last year. And of course, this anniversary this year, the 60th anniversary of the independence from Algeria from France, that is of course still in everybody's minds. But behind this, Algeria is indeed the third biggest gas producer and actually provider to Europe through 3 pipelines. 2 go to Spain, 1 go through Italy. They also have some LNG tankers that could arrive in France in the port of Marseille, which has 2 big LNG facilities. So Algeria could technically provide more gas to France, to Europe. Algeria produces about 100 billion cubic meters of gas. That was the number of last year. And the Sonatrach had said at the start of the war in Ukraine that they could potentially increase this capacity and were ready to provide more gas to Europe.
And can they increase that capacity ahead of the winter and help, at least around the edges, solve France's energy crunch?
The problem for Emmanuel Macron and for other countries in Europe is that Italy has already taken a lot of the extra capacity, because Italy has this very convenient pipeline called Transmed that goes directly undersea from Algeria to Italy. And last month in July, Mario Draghi went to Italy and there was this $4 billion deal signed between Eni, Total and Sonatrach, the Algerian state-owned company, for an extra 4 billion cubic meters of gas provided by Algeria to Italy. So basically, a lot of the extra capacity is already taken by Italy. France could also import more via the LNG tankers, but the Sonatrach head has warned that the liquefaction plants in Algeria can only operate at about 50 to 60% capacity because they need more investments. The good news is that the Algerian government has planned about $40 billion of extra investment over the next 4 years in oil and gas infrastructure. So in fact, Algeria and the Algerian president may also call Emmanuel Macron for financial help in terms of investments if they really want to see this capacity increase over the next few months.
Yeah, a quid pro quo there, maybe, from the Algerians. OK, we'll continue to watch that. Caroline Connard in Paris with a preview of that visit by Emmanuel Macron to Algeria. Coming up, we will talk summer travel and the outlook for the rail industry with Jodie Ford, the CEO of Trainline. That is next. This is Bloomberg.
CZ ฟิล์มบริการติดฟิล์มรถยนต์ 3M รามิน่ามาตรฐานสูงทดสอบฟิล์มฟรี
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Recently, cryptocurrencies have been very popular. If a client came to you and said, look, I'd like some cryptocurrencies in my portfolio, what would you say?
Oh, we've actually been really deep into crypto, deep into learning about blockchain, and all of the new businesses. You know, I would characterize this as crypto learners. You know, we have made a series of toehold investments on behalf of our clients, both in some of the currency baskets as well as with some venture firms that are investing primarily in the crypto area. I think it has the potential to be completely game-changing, but it is still such the Wild West, and so it's so uncertain. But it has the potential to completely upend everything.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
Today, as the world watches inflation rise, employment rebound, and fiscal policies react, all roads lead to Jackson Hole for the Kansas City Fed's 2022 Economic Policy Symposium. Bloomberg's all-star team is live as policymakers and financial insiders discuss the economic issues and solutions that keep the world's money moving. Coverage starts today on Bloomberg Television and Radio.
Welcome back. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Now, it has been a mixed summer for the rail industry. Ridership is down following deep structural changes as more people work from home, and those who do travel have been disrupted by strikes. But there has been a big rebound in tourist inflows as visitors return after 2 years of COVID-related restrictions. For more on all of this, then, we're bringing in the CEO of Trainline, Jodie Ford, here in the studio. Jodie, thanks for coming into the studio. Let's just start with the top line in terms of what you're seeing. Activity post-COVID, some revenge spend from travellers, and whether or not you think it's going to be sustained.
So it's really encouraging. I think the big story here is that in the UK market, we saw data at the end of July, 94% back in terms of passenger volume. So sort of squint, and there's a recovery. That's been led by leisure travel, which has been very strong. But the other part of this, which is interesting, is international inbound tourism, particularly from the Americans, who have come in very strongly, not just to the UK, but also we sell tickets in Italy, in France, in Spain. We've seen the numbers of inbound Americans coming in double versus pre-COVID into France and indeed into Italy.
But how much of that is going to be short-lived?
Look, it looks very encouraging in terms of those trends. I expect the UK recovery category just keeps going up in terms of leisure. We're now north of where we were pre-COVID. And when you look at the inbound tourism, there's this broader theme of wanting to use rail and get off the plane, which is, we hear it all the time, and I think it's an increasing trend. So I expect those numbers to keep going up into next year.
Okay, so there's the leisure component looking very positive, but it's undeniable, but the work from home shift has led to this structural change in terms of the number of commuters on rail. And then, of course, you couple that with the strike action that we've seen. I've had to get a car 3 times when I would have preferred to get the train this year. Those issues continue. And how much of a drag do you see that going forward, longer term, the structural changes, and then this industrial action on the railways?
So for the industry as a whole, I think the good news is that leisure has come back so strongly that we are at this 94% number. Yeah. I do think, as you say, there's a new way that people will work. And one of the things that we're doing here is actually bringing in a kind of electronic season ticket, getting rid of that paper season ticket so that actually you can begin to scan and go. And it's things like this that reduce the friction, I think, the commute, which will help commute recover. And we have seen that continue to recover. And I think we'll have to wait and see next year exactly the big employers and what their policies are, quite where it ends up. But I do expect further recovery.
What is the hit to Trainline from a strike?
So we don't sort of talk about those numbers. What I would say is when we pull back, we've been really encouraged with the overall recovery, and that's been ahead of our expectations with that 94%.
Do you get a sense that the industrial action is going to come to a conclusion? What are you hearing?
So, look, we kind of hear as in the end, we just work with our customers through the strike action. Our focus is always about trying to remove the friction for them to change their ticket and support them in what is a difficult and frustrating time for them.
Talk to us about competition as well. You've got Uber Travel coming in. They're offering some tickets for example, UK to France travel. How much of a threat, how seriously do you take that?
So look, we actually think competition's a good thing, and particularly in these European markets. What we're seeing here is that the state incumbents has been the only way that customers have thought about buying train tickets. Trainline has got what I believe is the best app in Europe, and actually disruptors coming in and telling people there's alternative choices is very encouraging and really exciting. And I think one other trend which is big here is the competition beginning to emerge between European capitals as challenger brands come in. So between Madrid and Barcelona, by the end of the year, there'll be 4 different services that a customer can take. And in that situation, they need someone like Trainline to sort of explain all the different train times, all the different prices and services. And we think there's an increasing role for us as an aggregator in those markets. In fact, Madrid-Barcelona is up 5x for us versus pre-COVID.
What are your key international markets then at this point?
So we're focused on Italy, France and Spain.
How much of that is down to what's happening in the UK with Great British Railways, the plan there, posing potentially a threat to Trainline in terms of some of the pricing transparency that comes through and the formation of that new plan?
So I am bullish on in terms of the UK market and our ability to continue to innovate and grow for customers, bringing in new products like the season ticket I just talked about. But also the European opportunity is very significant. We're targeting to do €1 billion of sales this year in Europe.
Okay, €1 billion of sales in Europe. One last one in terms of the heat waves we've seen across the UK, and that's driving people to the beaches and other tourist destinations. That's been a benefit, presumably, in terms of the demand for travel. Do you expect those changing kind of weather conditions to play a factor longer term as well, or is this a one-off?
So look, who knows quite how the weather evolves, but what we do see is that leisure travel is back in a big way. That has driven it. The heat helps, of course, and we think that the leisure on rail will just continue because people are increasingly, especially when you compare it to car ownership and kind of petrol prices, people increasingly seeing rail as a way to travel with great value.
Okay, Jodie Ford, CEO of Trainline, thank you for coming into the studio, walking through what's happening in that space, even as, of course, industrial action continues across the rail lines here in the UK. Let's get to your Bloomberg Business Flash now with Leanne Gerrans. Leanne.
Good morning, Tom. Novartis says it is planning to spin off its Sandoz unit, creating the largest European generic drug company by sales. The Swiss pharmaceuticals giant is refocusing to concentrate on developing and delivering breakthrough medicines. The separation should be completed by the second half of 2023. AIA Group has reported a 15% fall in new business value in the first half of COVID lockdown dented insurance sales in mainland China. The Hong Kong-based insurance giant has long taken pride in an agency workforce that sells more profitable products than its peers, but that strength has worked against it as China locked down major cities. And Peloton shares have surged the most in 6 months after the company announced it will sell its exercise bikes and accessories accessories on Amazon. Peloton products were previously only available via its website and retail showrooms. The one-time pandemic darling has been struggling with slowing demand and inventory build-up and strategy changes. And that's your Bloomberg Business Flash. Tom.
Leanne, thank you. OK, coming up, all eyes on Jackson Hole. We're going to be breaking down the Economic Symposium next with Bloomberg Opinion's Marcus Ashworth. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade, we want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity, we want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK. Have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
It's gorgeous, but not luxurious. Jackson Lake Lodge is where economists and central bankers gather every year, not for the accommodations, but the conversations. Housed not in fancy hotels, but rustic cabins, they come for 2.5 days of eco-nerd talk about math-dense academic papers. They meet in this functional conference room, not quite the same as the electronically wired, mahogany-paneled Fed conference room back in Washington. For Global Wall Street, it's not about the conversations or the accommodations, but the implications. The papers don't matter much to investors, but the policymakers' comments on TV and in print do, particularly the Friday keynote by the Fed chairman. Talk of inflation, unemployment, recession, and what it all means for interest rates and profits. Now, we're here because of Paul Volcker. Back in 1981, the Kansas City Fed wanted a big name for their new conference. They came to Jackson Hole because the trout fishing is great, and Volcker loved to fish. The rest is history. The irony is this year, the financial world is wondering whether current Fed Chair Jay Powell will be Volcker-like in committing the central bank to fighting inflation above all else, even if it results in recession. If he isn't, stock markets might fall. And out here they know you don't feed the bears. Michael McKee, Bloomberg, Jackson Hole, Wyoming.
OK, at Jackson Hole, Bloomberg Opinions, Marcus Ashworth now. Let's bring him in, calling for an honest reflection on the causes of the rampant inflation the world is currently battling. We can read out some of this. Of course, Mike McKee talking about the potential Volcker moment and linkages to the formation of Jackson Hole as the location and how that ties into Volcker and whether or not you get to see a Volcker-esque Jay Powell. The quote here from Marcus Ashworth then, "Now it's time to take away the punch bowl. Let's hope the unity shown between central banks during the pandemic is mirrored, but that needs to start with clear communication of what has gone wrong as well as what needs to be done to fix it. It needs to be a mea culpa from officials at Jackson Hole." Let's bring Marcus Ashworth in at this point. Marcus, what do you hope then to hear from Jay Powell and team?
Well, I don't think we're going to get any of that, unfortunately. I just would like to see it. But we're going to get a hawkish Jay Powell, because he sort of has to be, because every time he says anything other than extremely hawkish, and bear in mind, at least the Fed are all in unison, even the doves like Neil Kashkari are being overtly hawkish because they're trying to get their message across, and the market keeps on looking for some evidence of a dovish pivot, which is, I think, why Powell is boxed in a bit here. He's got to be pretty harsh, and at the same time, I think they will also hike 75 basis points rather than 50 next time round. But it would be interesting to see a proper clarity, which Powell has started to give at Sintra, the last ECB forum, the last big sort of powwow. He mentioned that basically they don't know anything about inflation, realised how little they knew, and they're starting to get a better grip on it. But a bit more of that as to why they got inflation expectations so wrong. Bear in mind, this time last year, he stood up at Jackson Hole and said, effectively, inflation was transitory. That hasn't attested very well over history. So I think we can get something from him that there is a balance, there's a trade-off between crashing the economy or fighting inflation, which is very largely supply side. Would that not make it worse, like Joseph Stiglitz said yesterday?
Does Andrew Bailey of the BOE set out the kind of the guide rails for how to be more honest and more frank about the challenges?
Sometimes you can, actually. To be fair to Bailey, he does couch it in rather complicated terms and perhaps isn't the most approachable. But every now and again, they do actually say, look, we don't fully understand this and we are trying our best. And I think a bit more of this from all of them, just to say, look, and in fact, even Lagarde has come out and said that they basically don't look at their models, just their models, because evidently they've been proved very wrong. So we're getting there a little bit more. A place like Jackson Hole are full, look, we got this completely wrong. The reasons why we got it wrong, we're not trying to sort of humiliate ourselves, but we can educate everyone and ourselves. And only then, I think, can we get a real buy-in into, yes, we will have to see unemployment go up, the economy crash a little bit, and stocks may suffer.
Marcus, we hear from the likes of UBS, we hear from the likes of BlackRock saying that we are in a new inflationary dynamic, that we're not going to be getting back down to that 2% target. It's going to be more like 3%, maybe 4%. Does there need to be honesty about that? Is that an impossible admission from the Fed?
Well, I think that's exactly the type of stuff that we have to hear. So if it's going to be, how long will the medicine take, and how bitter will it be? And I think as long as there's an explanation of that, we understand what we can do on inflation, and equally what they can't. Therefore, what they're prepared to weather. I mean, I've long argued that a very fixed 2% inflation target, it isn't fit for purpose in the current environment. We need to have a more flexible one, but that needs to be matched with an idea of what's going to happen to money supply. And yes, that there is important, the monetary indicators, as well as things like nominal GDP. That this needs to be a franker, more open, and I think that will lead for a better policy overall. Okay.
Time for a mea culpa from the Fed and co. Bloomberg Opinions, Marcus Ashworth there. You can read more sharp insights, of course, from Marcus and the Bloomberg Opinion team by typing OPIN GO on your terminal. Futures stateside pointing up by 0.8%. Bloomberg Surveillance Early Edition continues. This is Bloomberg.
CZ ฟิล์มติดฟิล์มรถยนต์เกรดพรีเมียมโดยช่างประสบการณ์สูงปรึกษาฟรี
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
The 700th anniversary of Dante Alighieri's death has triggered the work of many institutions and offered a very rich schedule of events. Today in Santa Croce, we present one of these projects that suffered a difficult start because COVID-19 has stopped the project that was shared by the Opera di Santi Croce by the Franciscan community from Florence municipality and the Fund for Religious Building of the Internal Minister. Today, Felice Limosani's project is finally enjoyable. In the Pazzi Chapel, the marvelous architecture by Filippo Brunelleschi, the most important images from the Divine Comedy created by the French illustrator Gustave Doré. Through these images, we can live the violent emotions of hell, the weight of purgatory, and the sublime joy of paradise.
The digital humanities are a cultural occasion to exploit. Summing up, it's about merging humanistic disciplines with new technologies. I find this to be an innovating and modern tool to update culture. Cultural heritage becomes something to hand over to the new generations and not to be put aside, so it's about using technology, pixels, and binary code with a human and humanizing content.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Ken Griffin is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
Clearly, last year, the Fed was really off its mark.
There is a divergence between the Fed and the market.
I think we're going to be at 4%.
To me, this whole argument that they should, hike well beyond 4% doesn't make a lot of sense.
Our view is that the Fed basically stops by the end of the year. I mean, you're going to be at 350, and the hiking cycle is going to be done.
Raising interest rates doesn't solve the supply side problem. It can even make it worse.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. China tries to revive a sluggish economy. Beijing adds $146 billion of funding aimed at infrastructure. But will that be enough to overcome lockdown damage and the property market slump? Investor sentiment is shifting as we wait for that crucial speech at Jackson Hole from Fed Chair Jerome Powell. Bloomberg Surveillance is on location with special coverage. And Europe's energy crisis, the $279 billion that politicians have earmarked for easing the pain may not be enough. Energy ministers in Europe consider an emergency meeting while natural gas prices continue to soar. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta and Kaylee Lines in New York. Matt Miller is off today. Well, it's finally here. Jackson Hole, that symposium has arrived. Kaylee, we finally get to see Mike McKee wearing a Stetson. And markets seem to be in positive mood. I don't think the two are connected.
Yeah, well, of course, markets have been eagerly anticipating this Fed symposium, but you also have to take into account the news out of China overnight when you think about the risk sentiment that definitely seems to be prevailing today. It certainly prevailed in the Asian session as they digested news of more stimulus from China, $146 billion, mostly targeted at infrastructure spending. The question, though, is how far can that really go to help the Chinese economy, which is still dealing with COVID-0 policy and turmoil in the property sector. So that's why you see Chinese stocks only up about 0.8%. Yes, a move further into positive territory, but it was actually much more muted than what we saw in Hong Kong, which was a delayed session due to a storm, but a big move for the Hang Seng, up about 3.6%. And as for in other asset classes, how that Chinese stimulus news was feeding through, you did see bond yields moving up about 2 basis points on the 10-year in China, which now trades just shy of 266. And the Chinese yuan, after falling to its weakest level against the U.S. dollar in 2 years yesterday, is gaining a bit of strength back, right now trading at 685.89, Creedy.
Yeah, Kaylee, I think it's fair to say that sentiment has clearly gone across Atlantic or across Pacific at least. We'll get to the European session in just a moment. But take a look at this. The S&P futures are up about 0.9%. Already you are seeing a pretty positive session. It's kind of hard to put that on a fundamental reason here stateside. So it must, of course, be the China story as well. That stimulus once again pushing this risk sentiment higher. But take a look at this. 10-year yield is really where it gets interesting, because at the same time that you see that risk-on vibe in the stock market, you're not necessarily seeing it in the bond market. In fact, 10-year yield hovering around 308 for our radio audience, about 2 basis point move lower. And with those yields coming lower, the dollar follows. You do see weakness in the greenback, down about 0.4%, which once again could be going back and feeding into that strength that you are seeing in the stock market. Remember, that inverse correlation remains strong between the dollar and U.S. stocks. So remember, certainly feeding back. And of course, Bitcoin, that risk sentiment indicator, not flashing green, not flashing red, just about unchanged on the day, still trading with a 21,000 handle, Anna.
European stocks, though, Chrissy, to your point, not unchanged, showing some signs of life. European stocks moving higher, up by 0.7% on the UK market. The DAX over in Germany, 0.6% higher on the CAC 40. And some of this comes down to that Chinese data that Kaylee was talking about, or Chinese news flow, rather, about support, 19 measures being announced by the PBOC. That set the positive tone through the Asia session, which then filters into the European trading day. But we also got some data out of Germany. And yes, sentiment around business executives deteriorated, but maybe not as much as some had expected. Is that a silver lining, or just a storm, some calm before yet another negative storm? We'll see. One thing that's been causing a lot of negativity around the European story, of course, has been the higher gas prices, and that continues to be a story today. This is the benchmark for the Eurozone, and it is up another 8.5%. It's certainly making moves above 300 euros per megawatt hour, which has been something of a level to watch of late. That was a big story yesterday, of course, as well, and we watched as that put upward pressure on short-end yields in Europe. In the UK, in the Eurozone, it was a similar story. Those gas prices going higher, assumptions about inflation going higher, and therefore assumptions about rate hikes going higher. And that certainly was the case in the UK yesterday. So we saw those yields going higher. Today, we're pulling back then a little bit from those trends of yesterday, which were quite pronounced. I put Yara International in. This is a Norwegian-based business, a really big player in the fertilizer market here in the European part of the world. And, of course, fertilizer has been under pressure on the cost front because of the higher price of gas. And they've said today that they're going to reduce their utilization in some of their ammonia facilities. And this is an ongoing story, one we're tracking, and looks set to put pressure on some in the agriculture space. CRH, an Irish building supplies business, they managed to increase their margins despite all of the cost pressures that kind of business is facing. They're passing those on to their consumers, and they're managing to increase margins, and that's going down really well with investors, Kaylee.
All right, Anna. Well, let's talk about what is ahead today, because other than being Jackson Hole Day, there is a lot else going on, including from another central bank. The ECB will be publishing an account of its July policy meeting at 7:30 a.m. New York time. Plus, French President Emmanuel Macron will be starting a 3-day trip to Algeria, which is one of the world's largest gas producers. We'll get some economic data here in the U.S. GDP figures coming at 8:30 a.m. Eastern. Plus, Peloton will be reporting its earnings results before the bell. But of course, Treaty, as we've said, Jackson Hole is the big event of the day, kicking off as central bank watchers will be following for clues on the Fed's September meeting.
And surely something that's going to move the markets. But let's go back to what's moving the markets this morning. It all comes back down to China stepping up with more stimulus to stabilize its slowing economy. It's adding $146 billion of spending, largely focused on infrastructure. Enda Curran, our chief Asia economics correspondent, joins us now from Hong Kong. And walk us through the details.
So it's another wave of stimulus for China's economy. It speaks to urgency now among the government to try and get more money into the economy. It will come through two channels. State policy banks will invest in new infrastructure projects on one side, and on the other side, local governments can spend on infrastructure projects as well and speed up their spending to get shovel-ready projects off the ground. Now, at the same time, though, the government said they don't want to overdo their stimulus. They want to keep an eye on overall level of borrowing that they are putting into the economy. And a lot of economists then reacted to say maybe this won't be enough to turn things around. Goldman Sachs, for example, saying China forecasts still looking at 3% of GDP growth this year. So on the one hand, it's clearly new money. It's an indication of urgency among policymakers. But most economists today saying it won't be enough to turn things around on its own.
Yeah, which is the key question, of course, up against those COVID rules. Enda, thank you very much. Bloomberg's Enda Curran joining us there with the latest on China. Let's think about the Fed and central bankers from around the world gather for the Fed's annual Jackson Hole Symposium, which kicks off today. The spotlight is on Chair Jay Powell and just how hawkish his message might be. Joining us now for more is Bloomberg's Michelle Jamrisco. Michelle, what is the latest on what we can expect out of Powell and all of the other Fed voices at Jackson Hole?
Well, Anna, of course, all eyes on that Jay Powell speech Friday, 10 a.m. Washington time. It seems like there's an increasingly small margin of error for Powell to satisfy the Fed watchers in this case. He's going to disappoint a large swath of Fed watchers in any case. But what to expect? Expect a hawkish Fed. Expect Powell and company to kind of reiterate their message. As futile as it might be to convince investors of their strategy, they do want to keep pushing back on this idea that they'll slow walk or even stop rate hikes sooner than they've said. Also, the idea that they might pivot to rate cuts. Some investors looking at early 2023 for that. They'll push back hard on those insinuations. Expect ongoing disagreement also among attendees about recession risk and also the timeline of how long these rate hikes will last. Of course, the other nugget out of the Fed minutes that we'll be watching is, who has this concern beyond Esther George, as we know, about the long and variable lag of monetary policy and needing to wait and kind of see what the impact of rate hikes already has been before they move further or move at the same pace that they have been moving. Expect many big picture debates, the whole Volcker era debate around inflation, a lot of historical parallels and questions around, whether the Fed is doing the right thing by, from the big picture perspective. And finally, expect a fun crowd at Jackson Hole. We know ECB, BOE, BOK representatives will all be there for one thing, and it's always a great time. So it'll be the first in-person annual confab since 2019, so a lot of people will be there excited.
Yeah, and I'm sure Tom, John, and Lisa, Team Surveillance, will be adding to that fun crowd. Michelle, you mentioned that some Fed watchers are going to end up disappointed. Are there things that they would like to hear that they probably aren't going to get?
Well, first and foremost, don't expect Powell to give any sort of certain indication or confident indication of the size of the rate hike in September. I mean, a lot of people looking at 50 or 75, that being the big debate right now. We still have a ton of data beforehand then, aside from a ton of other things that could happen between now and that September 21st decision, namely PCE, inflation, the Fed's preferred gauge is out tomorrow. We have a jobs report and CPI data before then. So plenty of drama ahead. I don't think they're going to, signal any commitment in one way or another tomorrow.
Michelle, thank you very much. Bloomberg's Michelle Jamrisco. Our special coverage of the Fed's annual symposium in Jackson Hole starts today at 6 a.m. New York time. Tom, John and Lisa will be there. They'll be hosting Bloomberg Surveillance on location live from Wyoming. Now, confidence in Germany's business outlook fell in August as soaring inflation and fears about a possible recession intensified. The deputy director of the IFO Center for Macroeconomics spoke earlier on Bloomberg.
If you compare business confidence of the third quarter with that of the second quarter, then this is clearly signaling a decline in economic activity of the German economy in the third quarter. So after this more or less stagnation in the second quarter of GDP, we expect GDP to decline by around 0.5% in the third quarter.
European natural gas prices have been extending their blistering rally as the worst supply crunch in decades boosts pressure on politicians to ease the pain. European Union energy ministers may hold an emergency meeting to discuss the price spikes. Bloomberg's Lizzie Burden joins us now with more. A lot of expectation then on governments around Europe to do more here, Lizzie.
Yes, because you're seeing spiralling prices toward record levels in Europe and Asia because of Russia's curbs and the outages elsewhere. But really the reason for the surge in Europe is because of the competition with Asia. You've got benchmark futures near the level at the start of the war in Ukraine, and because of this rise in energy prices, the pressure on inflation, the recession risks across the euro area, you've got risk of civil unrest and political upheaval. So that's why EU energy ministers are considering meeting up to debate an energy price cap across Europe. We really don't have much more detail than that at this stage, but France has said, even though it's very much aligned with the EU on energy policy, it may not back the logic of a Europe-wide price cap. Although Emmanuel Macron, the French president, has said that Russia's weaponization of gas is, to use his term, a tipping point for Europe.
All right, Bloomberg's Lizzie Burden, thank you so much. Let's bring it back to the United States now. President Biden's plan to forgive a portion of student loans held by tens of millions of people will ripple through the economy. But no factor will be watched more closely than inflation, which is already at a 4-decade high. Biden announced his student debt relief plan yesterday.
An entire generation is now saddled with unsustainable debt in exchange for an attempt, at least, at a college degree. The burden is so heavy that even if you graduate, you may not have access to the middle-class life that the college degree once provided.
Jack Fitzpatrick, Bloomberg government reporter, joins us now from D.C. with more. So, Jack, it took the president a long time to come to the decision to make these moves. How's it going down in Washington?
It was some mixed reviews on Capitol Hill, especially if you try to figure out how this plays among the moderates who weren't sure what to make of this plan. This is a popular move with the progressives who actually pushed for up to $50,000 of debt forgiveness. But if you look at someone like Senator Michael Bennet from Colorado, who's in a tough re-election race, he said this should have been targeted more, looking at that $125,000 income cap. Someone else like Senator Maggie Hassan, another person with a tough re-election race, said this was a pretty good compromise. This was not everything that the Elizabeth Warren types wanted, although it was something progressives were significantly more happy about. And of course, among economists and people trying to do the math in the early days after this announcement, it did get some pushback from moderate Democrats, people like Jason Furman, saying this doesn't make a lot of sense when inflation is a key concern. So it's something Democrats are fairly happy with, despite some heartburn among the most moderate, vulnerable Democrats in the early response to this.
Jack, let's go from the current president to the former president. Today also marks a key deadline when it comes to the affidavit that has to do with the search of President Trump's Mar-a-Lago home. What can you tell us?
Yeah, today at noon is the deadline for the Justice Department to send their proposed redactions to the federal judge in Florida, who said they do have to put out at least some of the information from that affidavit that is the justification for their search warrant to search Mar-a-Lago. The judge in this case noted that DOJ argued it would take too much time and work to go through all those potential redactions, and he rejected that argument. And then the other piece of information we've gotten from the judge since this initially came out a week ago was that he has looked at that affidavit and said that the information in it does appear to be legitimate. So there's a little bit of an endorsement from the judge just in the veracity of the claims in the affidavit that underpinned that search warrant, which shouldn't be surprised because they did get the search warrant. So we don't know exactly how much the judge will agree to redact, but those proposals are due from DOJ at noon today.
All right, well, we'll look out for updates. Jack Fitzpatrick of Bloomberg Government, thank you so much. Now let's get an update on some stocks moving in pre-market trading here in the U.S. I want to begin with NVIDIA, the big U.S. chip maker, one of the biggest stocks by market cap here in the United States. It disappointed after the bell yesterday. What's interesting is they already had warned 2 weeks ago that their revenue for the second quarter was going to disappoint, but the third quarter forecast also coming up short. The real issue for this company is gaming chips, and a slowdown in that market in particular The lower than expected forecast may indicate that slowdown is going to persist for some time. So that stock is down a little more than 3%. Also lower after results is Salesforce. Its guidance also disappointing. It trimmed its revenue forecast for the full year, shows that maybe businesses are pulling back on spending on business software in a softer economic environment. That stock definitely softer this morning, down about 6.6%. What's interesting, though, is apparently businesses are still spending plenty of money on cloud software, because a company in that space, Snowflake, also reported yesterday and beat expectations by a pretty wide margin, and that stock getting nice reward this morning as a result, up about 18% before the bell, Anna.
That is a sizable move. Coming up on the programme then, Kaylee, markets counting down to Powell's speech at Jackson Hole. We will speak to Ryan Wang, US economist at HSBC, find out what he expects. This is Bloomberg.
VK ฟิล์มรถยนต์เกรดสูงกันร้อนสูงสุด 76%
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
While Teslas and the like make for good headlines, the reality is that even if every car on the roads today went electric, it wouldn't be enough to curb global emissions to avoid catastrophic climate change. Greenhouse gas emissions from transportation account for about 29% of total U.S. greenhouse gas emissions. So what about the other 71%?
Buildings across America burn fossil fuels to operate. What we want to do is make that all electric. Instead of burning oil and gas to give us the energy and electricity we need, we want to do 100% clean energy, all electric. We want to turn buildings into Teslas. Just like a Tesla or an electric vehicle is all electric with no fossil fuels, we want to do that with our buildings. And if we can do it in one building, we can do it in all buildings. And if we do it in all buildings, we'll reduce 30% of US greenhouse gas emissions.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
Yes, it's about renewables.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. Today, as the world watches inflation rise, employment rebound, and fiscal policies react, all roads lead to Jackson Hole for the Kansas City Fed's 2022 Economic Policy Symposium. Bloomberg's all-star team is live as policymakers and financial insiders discuss the economic issues and solutions that keep the world's money moving. Coverage starts today on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Kriti Gupta in New York and Anna Edwards in London. Matt Miller is off today. Now keeping you up to date with news from around the world, here's the first word. The Biden administration has won a judge's order ensuring women in Idaho can get abortions in medical emergencies. That came less than a day after the administration lost a similar fight in Texas. The mixed outcomes point to hotly contested court battles ahead. Bed Bath & Beyond is closing in on a lifeline from Sixth Street Partners. Bloomberg's learned the home goods retailer is in talks for a new line of credit that may be around $375 million. That will give Bed Bath & Beyond breathing room while sales slump and it burns through cash. Bloomberg's learned that billionaires Ted Leonassis and David Rubenstein are considering a bid for baseball's Washington Nationals. The Nationals are said to be worth $2.2 billion. The two men may also put in a bid for the Baltimore Orioles if that team comes up for sale. And in the UK, two research groups say the government will have to draw up previously unthinkable measures on the energy crisis. The Resolution Foundation and the British Chambers of Congress are calling for COVID-style emergency support to deal with soaring costs. Natural gas prices are now 10 times higher than the last decade's average. So coming up, we'll talk more about how gas prices are weighing on the European economy and on the markets. We'll have more coverage next. This is Bloomberg.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายกันร้อนดีราคาถูก
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, of the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta with Kaylee Lyons in New York and Anna Edwards in London. Matt Miller is off today. We are simulcast on TV and radio. As we talk about financial conditions tightening, a big part of that is going to be the credit spread story that Bob Michael over at JP Morgan says could only get higher from here. Let's bring in Laura Benitez, our Bloomberg credit reporter, joining us now to really dive into all of this. Laura, thank you as always for joining us. Walk us through the dynamics in the credit market. To what extent is what the Fed doing mispriced?
Well, as you know, stocks opened on a much stronger footing this morning, and credit has followed that to an extent, but credit has a more holistic approach generally, and there is a lot of nerves still baked in, saying that some key risk gauges have started to fall this morning. So it's looking a little bit calmer for now, but obviously all eyes will be on the Powell speech tomorrow.
A bit calmer for now. September is clearly very busy usually in credit markets. Does this September look as if it will be busy, or are businesses put off from raising money right now?
It's a really good question because it's normally the busiest month of the year. It's really difficult to say how this month will look, but investors that do have higher cash balances than usual because they've been kind of reserving cash. So there is cash in the system. If we do see some stability in the market, we could actually see some sales. But for the higher risk junk bonds, I think it's quite touch and go, and we'll see how it goes, I think, throughout September.
OK, Laura, thanks very much. Thank you for joining us. Bloomberg's Laura Benitez with the latest on the credit markets. And, of course, the countdown to Jackson Hole continues. More on that shortly. The surveillance team, of course, on the ground, bringing you live coverage of the Jackson Hole Symposium from today onwards. And for market analysis, check out MLIV Go. That is the function to use on your Bloomberg terminal. We will come back with further look ahead, further detail around Jackson Hole. What is the expectation over at HSBC for what we should hear and what we will hear from Jerome Powell? Does the Fed need or want to reset market expectations around Fed hikes? Will we get any detail around Fed hikes and the size and scope of those? Our colleague Michelle Jamrisco telling us earlier on that was not very likely. Stay with us. This is Bloomberg.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายการล้อนดีราคาถูก
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
The standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly right.
And then the fund just typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
Top-end venture is sort of 3x net of fees. Ideally, you're hoping for more than that. You're hoping for 5x or more. You're illiquid the entire time, right? So you would hope to get paid for the liquidity.
And today...
So yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different, Digital Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. China tries to revive a sluggish economy. Beijing adds $146 billion funding aimed at infrastructure. But will that be enough to overcome lockdown damage and the property market slump? Investor sentiment is shifting as investors wait for that crucial speech at Jackson Hole from Fed Chair Jerome Powell. Bloomberg Surveillance is on location with special coverage. And Europe's energy crisis, the $279 billion politicians have earmarked for easing the pain, may not be enough. Energy ministers in Europe consider an emergency meeting while natural gas prices continue to soar. I'm Anna Edwards in London with Kriti Gupta and Kaylee Lines over in New York. Matt Miller is off today, and the mood a little bit more buoyant today in markets, Kriti.
It absolutely is, and a lot of this comes from overseas, really. The idea that China is pumping more stimulus into its economy. Well, it flew into Europe, it also flew into the United States, and that's really what you're seeing when it comes to the S&P 500 futures, up about 0.6%. But Anna, I will say, in just the last 30 minutes that we've been checking markets, you are seeing perhaps a little bit of that momentum fading just a touch. I'd argue even that Bitcoin is starting to slump a little bit, down about 0.2%. About 30 minutes ago, it was unchanged on the hour, and at the same time, you are seeing yields inch just slightly lower. We are now down about 3 basis points on the 10-year yield, 307 for our radio audience, and on the Bloomberg Dollar Index, well, it is following weaker by about 0.3%. Kaylee.
Well, Kriti, of course, there's also still earnings to keep on top of, even though the season almost entirely is over. NVIDIA reported after the bell yesterday the big U.S. chip maker had already pre-warned that revenue for the second quarter was going to disappoint. Now its revenue forecast for the current period also disappointed. The slowdown in gaming chips is really the problem for that company, and that stock is down nearly 4% as a result. Other big tech players, though, are doing fairly well in early hours this morning, including Tesla, which now is trading with its stock split effective. So the shares right now at 301.50. Yesterday they were closer to 900, but that 3-for-1 stock split bringing that price down, maybe bringing more retail traders into the action. It's up about 1.4%, while Apple is up about 0.7%. And it is a much bigger move in early hours for Snowflake, the cloud software company, giving a better than expected forecast. Shows businesses maybe are still spending on technology and cloud infrastructure and software, considering the benefit for Snowflake. That stock up about 17% before the bell, Anna.
Yeah, that's a sizable move, Kaylee. Here in Europe, we are, to Kriti's point, seeing a little bit of a pullback in risk appetite, but still positive across European equities. We're up around 0.3% on the stocks Europe 600 right now. And part of the reason we are pulling back could be around ongoing nervousness around gas prices. That has been a theme of recent months, of course. And this is the benchmark gas price. We saw it go above 300 euros per megawatt hour in yesterday's session, and it continues to trade above that level, up another 8% in just today's session. And as we were hearing from our colleague Lizzie Burden earlier, there is now an expectation that we might see more fiscal help and we might see an emergency meeting from European leaders. The cost of doing business, because this is something that doesn't just affect consumers but also businesses, is evident in these two stories here. Yara International is a fertilizer maker over in Norway, a big player in the European agriculture space. They've announced they're reducing the capacity utilization of their ammonia facilities. They face higher gas prices. CRH is a building materials company based in Dublin. That stock up by 2.5%. They are managing to pass on some of their costs, reporting higher margins today, and that is something that has pleased investors, it seems, Kriti.
Well, the question here is, will the Fed please investors stateside? At least all eyes right now on the Jackson Hole Economic Symposium kicking off today. Fed officials over the past couple weeks have weighed in on their next move.
The question right now is, can we bring inflation down without triggering a recession? And my answer to that question is, I don't know.
The scale 50-75 doesn't just depend on a data point, even an important one like the CPI.
Although we still have about 4 million people out of the pre-pandemic workforce, we continue to see strong employment gains and low unemployment rates.
I have a baseline case going into September that is 50 basis points. That's where I've been since the last meeting. But I have an open mind about whether 75 is going to be necessary, and a lot of that will depend on the labor market.
I think it'll be 3 3/4 to 4%. So sort of a 4% top funds rate at the end of next year is what I'm thinking about.
The idea that we are going to start cutting rates early next year when inflation is very likely going to be well in excess of our target, I just think it's not realistic.
Ryan Wang, U.S. economist at HSBC, joins us now. Ryan, thank you as always for making the time, getting up early for us. Let's start here with what we're expecting to hear from Jackson Hole tomorrow, specifically from Chairman Powell. A very hawkish market going into this event, going into this speech. To what extent is the Federal Reserve set up to fail?
Well, that's a good question. I think one key challenge for FOMC policymakers is, even though we already have started to see some signs of economic slowing,
That doesn't really answer the question about how long it's going to take to resolve some of these supply-demand imbalances in the economy. Whether you're talking about the labor markets, logistic markets, product markets, all of that continues to show signs of tightness. And that's the key question. How long will this current period that we're in take to resolve those issues?
Well, speaking of tightness, let's talk about the liquidity picture. We are looking at historic quantitative tightening, something that experts on Bloomberg Television have over and over and over again warned about in terms of what the Fed is taking on and the implications for the markets. How successfully can they actually pull off the amount of quantitative tightening they're doing right now?
Well, this is interesting as well. After all, the quantitative tightening plan that we're on was only formally announced in May, and we're only just about to see that step up to the new higher pace of balance sheet reduction. The plan all along has been to let that reduction in the balance sheet run into next year and evaluate broader financial markets, money market conditions, as well as the economy. Now, the primary focus from an economic perspective for the Fed is bringing inflation lower. So this side process of bringing the size of the balance sheet lower, in some sense, is a complication because the goal is to use policy rate hikes as the main instrument to control inflation, but at the same time allow that quantitative tightening process to run somewhat in the background, as we often hear from FOMC policymakers.
Okay, well, let's focus on hikes and the rate of Fed funds. We just had a headline crossing the terminal that Raphael Bostic, the Atlanta Fed president, says more strong data could tip the Fed to 75 basis points in September. And Ryan, we pay so much attention to the size of each individual hike, but it's ultimately what they all add up to and culminate at, what that terminal rate is. What do you expect it will be? And once the Fed reaches it, how